Hello, 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 hello. How's everybody doing? Well, I hope everybody's having an awesome day. This is 50 pips again. Welcome, welcome. 17th02 2014. I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. The fact you're in here means you're ready to understand you accept all the disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only, guys. So I hope everybody's having a good day. Thanks for stopping by. I just thought it'd be interesting to have a little session. It's been a while. Markets have moved a bit, so it should be interesting for us to go through some charts. So again, what I want to do today is clearly, hello from Barcelona. Hello, how are you doing? Hope everything's good. Mario Draghi's in the house. All the usual suspects are in the house. So what I want to do today is just try and go through as many charts as we can and just take a very simple approach to looking at the charts, and again fairly relaxed session, so we have some time. We'll see how long it takes us to go through the most interesting charts. So if anybody has any chart they want to look at, just shoot, let me know in the comment box and I'll get through it. The only thing I will say is, as usual, it will be first come first serve, and again all the comments stay there, so you don't, if you ask for a chart once, I'll get to it. No need to ask for it again. Just keep in mind that I will start by looking at the majors. I'll prioritize and try and focus on the bigger pairs or the indexes rather than any what we like to call the funny pairs. So what do you guys want to start with? Shoot. Yeah, I think you have to, in terms of context, right? What you have to keep in mind that today is a very slow day, right? And that should be a surprise to nobody at all, okay? Because U.S. markets are closed. There's no major data release, so it's not a big deal. Keep in mind that we'll have a lot of event risk coming in this week. We got BOJ on the wires. We've got RBA stuff. We got the ZEW, etc., etc. So really, MPC. So we're going to have a lot of event risk and potentially a lot of volatility this week, but that will likely start from tonight in the overnight session. So it's not surprising that we're seeing some profit taking on the moves, a bit of an inside day, slower day. It's completely normal, right? It's really it's very normal. Okay, so what's going on here? What's going on? Okay. Yeah, I think cable, a lot of people wonder, cables, we've been looking at cable for a long time, right? And pretty much back into this moves we're looking for. And as we've been saying, it's really about managing longs, right? Not and being very, very selective with shorts, okay? So if you look at it in terms of the weekly, right, we're right back into those highs, and exactly what we were looking for, move back into those highs. And right now the focus in terms of the upside is going to be, how are we going to behave all the way into those 70s, right, from 67s to 70s. Now the point is, as usual, we don't like to get short in front of a brick wall, and we don't like to get long in front of a brick wall either. And the point is, the question is also, why was I saying certain things on Twitter? It's about managing your longs and selectively looking for shorts here as we press into this strong resistance, right? So really, if you're looking for longs here, I'd much rather prefer to get some kind of retracement or breakout than getting long here. But again, the purpose of these sessions are not really for trade recommendations. So the only thing I'd say is that here we're pressing into extremely important resistance, and you have to respect that resistance. And it would be normal to see some kind of profit taking on the move, okay? However, don't read too much into the action on a slow day like today, but if it's going to get sold off, this is clearly an area where you'd want to see longs taking some profit. Been riding some nice longs for the past weeks, and as we're what you'd want to do is hold overnight from Friday, because when price moves so aggressively, there's a very high chance that we'll gap up and continue pressing over in the overnight session, and then you start to lighten up into this week, just taking some off the table simply because there's a lot of event risk, right? Right now, the focal point where clearly B is the most recent breakout point, okay? So right here, as we're chopping at highs, we have to keep in mind, last time the offers came in capping this level very, very aggressively, pretty much, around the 166.50s, 166.60s. So now the point is we've got offers capping, and most likely if this move is going to continue in extension, we'll get we'll get the bids coming in to support this area. So as long as we hold the breakup zone and that previous resistance acts as support, then we most likely see repeated tests to the upside. Okay, if we're going to see some kind of a bigger retracement, some people might be looking for the 50 back of this move from highs to lows. So basically that would be talking about the 165.30 zone, right? To see that, you need to get an aggressive break back below those previous highs. So this is really where we're standing going into the week, right? That's the most interesting levels that are close, relatively close to where we're trading. Okay, so if price is going to sell off, this is a healthy place for the market to take profits on some longs. Watch the retracements back into the previous resistance zone that now should act as support. If we break through, then we could look for a bigger retracement back into the 65.30, 65 level. If we fail to get traction below that level, right, if the bids still come in support, then expect this to continue to try and move up in extensions. So that's really going to be the focal point going into the week, and especially into the MPC. I'm not going to make too many statements on the data. We just see how the data reacts, how the price reacts to the data. But unless something new said that hasn't been said in the past, you'd expect this to trade sideways or continue to grind in the most recent direction. So that's really what I would be looking at on cable right here, right? So that's basically what would be focused on. A lot of people asking about gold, right? So gold, what's going on gold? Again, anybody who follows the blog or anybody who follows the charts will know that we've been looking for gold to rotate back into the 1400 level. 1300 was the first pivotal zone we were looking for, and basically it's got some traction very, very, very nicely recently. What you have to focus on in terms of the bigger move is, I'm just going to step back a bit on the weekly just to offer a bit more perspective, right? You see on that initial move down we had, basically what happened, we came in and we had this basing action where the market was trying to base, kept on being supported, and we broke out back into these highs, and this is the breakdown point. Okay, once we broke down, bids tried to support, we come back in and we're basing. What we've been talking about on the blog on Twitter is this basing action, and we said, and we kept on saying, when we printed there, we suspect people are going to look back and say this was a very cheap bargain price. Okay, all things being told, we expected this to rotate higher already at the beginning of last week, so it's taken a bit long than we were expecting. But what is the point? Well, the point is that right now, as it was looking for direction at lows and it's starting to catch a bid, and the bears were unable to hold this aggressive series of lower highs, it looks like we're poised to use this previous consolidation zone here now as support to try and grind all the way back into this breakdown zone. Okay, so don't be surprised if all of a sudden you see a lot of people who are very bearish gold now start to talk about 1400, 1500. Essentially what they're looking at is the fact that we came down, retraced, sold hard, we put in a double bottom, and we failed to aggressively break or to continue this move. So it would be just healthy to see some kind of retracement. Now the big question is, are we going to come back in? Are the sellers still going to try to cap, or are we going to continue to gain momentum? The way this is trading, again, to me it looks like if it's going to fail, it'll probably have to fail from a higher level. Okay, so right now if I had to look for stronger resistance, I'd be focused on a move right back into these 1500s, right? If you remember what we were talking about on the blog, we were talking about, I'm just going to roughly draw it in. 1250 being pivotal for direction, and basically what do we had? We had the 1250, we had the 1200, and then we had the 1300, and we said this was the current range. And what we were looking for is a break above 1300 to get this range shift and to move. So now the new range for us is going to be 1300 pivotal, 1250 base, and 1350. Let me just put on a 4 hour, it's going to be easier. And 1350 calling, right? So it's all going to be this kind of action. But again, it looks to me like it's trying to rotate back higher. You can see it here. It looks like those 1350s are going to be calling, and I'd look at 1350 to be the big pivotal level for that push back higher, or retracement back down. But clearly it looks like it's trying to catch a bid. It's trying to press higher. Very nice, very technical action. Okay, so what else have we got? What else have we got? Yeah, CAD. CAD is, again, we had a very aggressive breakout on CAD. Clearly not the kind of move you want to stay stubbornly short or you want to try and fade. And finally, we had some kind of, blow off action or big failure at highs, right? What was happening? We continued to catch a bid. If you look at this on this daily, very tricky, very difficult to get some edge trying to fade this to the upside. A lot of people not really understanding the strong fundamental breakout here, trying to get stubborn to the short side, trying to get short every time they see a wick, trying to get short. There's just very, very little edge to get short these kind of moves. Then we come in, we put some kind of a reversal top, and that's the kind of candle that starts to be interesting, right? You see a very big move where we clear stops to the upside and the downside. That's 100 plus pip range here, and that's when we start retracing back down. And what would we expect in this kind of action? We expect it to come right back down into the scene of the crime, basically in this congestion zone, right? And what I'm looking for is how it's going to behave here. Now, I suspect that this will keep on catching a bid on any dip. A lot of people were also asking me, what do you think about a move back into the 200? Now, even though this is being extended very aggressively, look at the 200. The 200 is miles away. So I'm not saying it can't get there, but again, I'd suspect bids to support this. What I would look at is I would think that on any aggressive selling, still those 107s, 106 are going to be protected, that breakout point. So instead of looking at least here, if we're going to look at the chart here, rather than talking about 200s one step at a time, on aggressive press down, I'd be looking at this breakup point as support. That's the way I'd be looking at it. I'd be looking at resistance. That's going to be a tough nut to crack, these highs that broke. And basically, I'd be looking at where we're hovering right here as a mid-range. What about other? Yeah, I'd suspect, I don't have it up on the chart, but I'm going to take a wild guess. I'd suspect the 100 on this daily is probably coming in here, and the 50 is probably coming in here. That's probably what it's looking right? But this, I consider this a big chop zone, and I'd consider the price will likely look for action here. If early in the week we can get new sellers at low, we might try and take a stab lowers. But if we can't break there, then I'd expect this to try and take repeated stabs back to the upside. So looking at this as a pivotal zone right here at highs, okay? But again, after such a move, just healthy to see some kind of a retracement, right? Just completely healthy. And if anything, a day like today, when market tries to hold, players try to hold overnight over the weekend, see if they get some follow through on a slow day in an illiquid market, and then they don't get any, well, they're just starting to take some risk off the table, pairing it, keeping in mind we're going to have a lot of event risk. So really normal action, nothing very surprising really, right? Yeah, I think here, in terms of Aussie, it's going to be interesting to look at. What we've been talking about is just the fact that you don't want to really get aggressive trying to play against the central banks, etc. And on strength, you really have the risk of the RBA trying to knock it down, even though it seems that might have diminished now. I mean, as far as we're concerned, we've been talking about two levels, which are the key numbers here, right? And again, if these are on nothing special, they're just on the blog. Basically we have the 91 zone, right? And then we have the 90 area, okay? So basically these are the two levels we're looking at, and this was a big structural level for us, and this was going to be the bull bear level, yeah, right? It's something it's a level that's been interesting for a long time. If you look at it, it's been an important area in the past, and it remains to be pivotal for action here, okay? Now, if you look at it on this daily, well, let's get back on the 4 hour. You see what's happening. The first time we came back into the zone after we sold through it very aggressively, the sellers came in exactly where we expected them to come in, right inside this area, and market got sold for a new leg lower. Now what's happened, we've come right back into this area, and we got another sell. Very nice trade there. Got lucky overnight if you're on this trade. As I said to some of the subscribers, I said, you know, if you wake up to that, you take your money and you run, right? And basically what's happened is we've retraced that sell-off quite aggressively. So right now it looks like it wants to press higher again. The way I'd look at it is still that it's a chop zone, right? So I'd be more interested in selling failures at the 91 or buying failures at the 90, you know, failure to go higher, failure to go lower, if you're looking at it as big as a range, as a bit of a range play. But as long as it's inside, it could be one of those cases where I say don't get confused about velocity of move inside range, because it could move it could be very whippy. But unless we get a daily close outside this range, I think it's going to be difficult for this pair to really free up. Now, globally speaking, I think this is probably going to be relatively range bound for a while, but it is what it is. So right here, I think it may be interesting to play the extremes here. If not, I just wait for the next move. But again, clearly more pressure to the upside if we get daily closes above that 91. More pressure to the downside if we get daily closes below the 90 level. Okay, if you look at it from a daily perspective, what I would say is something to keep in mind is the 200 on a break higher, right? If we break higher, that 200 got respected very, very aggressively. Very nice trade. This was a very pure trade. We had it lined up for a while. We looked at that. That was basically the right in line with the 50 back of the move down. Very, very pure move. You know, it doesn't get more technical than that. Highs to lows, confluence of the 50 back and the 200. Very nice trade to the downside there. Now, so what I'd say is, again, if we close higher, keep in mind it should have resistance. If it goes knife through butter there, then we could see some more upside, but I'd be cautious around that zone. So something to keep in mind, okay? On the ES, well, not a lot really on the ES. Remember, if you follow the blog, what we were saying is that we had a couple of interesting levels, right? And we said that basically it was stuck in 1850, 1800, 1750, right? And basically it was chopping around that range. But when we started to sell off equally, what we'd mentioned is that it was healthy to see some kind of a retracement, right? We got this move down, but also that if you look back on the charts, it's relatively rare for the market to put in big tops or bottoms with flat action at highs or lows, right? And we said, you know, it's more that it would be healthy to see a 1, 2, 3% correction, but if you're looking for the bigger move, most likely it will have to come with some kind of blow-off action at highs. We don't expect it to come with just a sideways chop at highs and then a sell lower, right? So what happened is we came back down. We were focused on two levels on that sell-off, right? The first support that got bought very aggressively in November, and then we had the second dip that got bought here that was in line protecting this previous spike high. And you see what happened here. We came back down very aggressively and we caught a bid right at that level, failure to hold below, and we started to reverse aggressively. Now, when it started to reverse, as long as we didn't move back above these whole 1800s, and that's why we kept on saying, it's all about 1800s. As long as we don't move back above 1800s, the sellers had to keep it below that 1800. As long as the sellers could do that, then, could be game on. But the moment we started to break and hold above 1800, we said watch for that to act as support, because very high odds we're going to go back higher. And as we said from the initial sell-off, if we fail hard in terms of a big swing high or swing low, we expect this to fail from a higher level. Okay, so going on to the week, let's see what happens here. Let's see if we trip some stops to the upside. Let's see if we get some failure. Clearly, a break above there and failure to hold is going to be a very interesting short opportunity. But again, you don't want to be stubbornly short. Here, for me, it's the same thing. The market is manage longs and very selectively and very very focused but selective. Look for opportunities tactically to short. And if you get into a swing, well, good, right? But don't fight the flows. Don't fight the market. There's very little edge. So again, going into the week, 1850 is really the focus. Also is a big round number. Probably a lot of stops around there. Market probably be tempted to take a stab at it. Let's see what happens. Clearly an interesting thing to keep an eye out for. Okay. Oh, Debbie, didn't see you. Hey, how's it going? So that's what I would be focused on here. Okay. Can I count on Debbie as the official timekeeper? Okay. Awesome. What's going on? So again, I'm just going through some of the charts. So I'm going through some of the comments, just seeing what charts people wanted to look at. Just trying to look at the most interesting one. Kiwi. I think it's really, I'm going to look at it because a lot of people are asking, but I don't think it's particularly interesting, but maybe some people might like the dynamics here. So what we've been talking about, I see, and somebody's asking, why do I keep on talking about the 8220s? Well, it's not a magical level. I'll just look, let's put it on the chart. So 8220, right? So that's the level it's on the chart. You just, the recording will be up on the blog. I'm actually experimenting with something. I'm recording. I've got the Adobe's recording, but I'm trying to record it with my screen capture too. So I'll attempt to upload it to YouTube too. I know a lot of people prefer the YouTube, so hopefully I can upload it on there, but this is probably going to be long, so it might take a couple of hours to upload. So we'll see. We'll try. We'll give it a shot, okay? So basically, if you go back on the weekly, right, or even on monthly, you can see it better. You see how important these whole 8220s were, right? We came back into it. There was a very big swing high, got sold off aggressively. Once we came back into it, when we broke, we got aggressive follow through. When we came back down, we got aggressive follow through to the so clearly this is a pivotal zone for action, okay? Now I have a feeling a lot of people have been blinded by the recent chop, basically not going anywhere on Kiwi. But again, and I don't want to go into the fact they'll probably raise rates, etc., etc. But as long as that's, it looks like that, probably hold an underlying bid tone. But look at it as at a monthly, right? I don't want to talk about bear flags or anything, but look at every time we dipped, we're still holding a whole big series of higher lows, right? And there are a lot of chances for this to press low, and it's still holding a good bid tone, right? So clearly this remains an important level, but again, I don't see that much weakness, okay? I see chop at highs, okay? So right here, what we were saying is this level, we said it's all about those 1820s and 8220s, and if anything, use that as an intraday guide to place tactical trades, right? And you can even see it here on the daily, right? Look, every time from even here, bam, wicks supporting, only wicks below, then it gets a bit choppy, but you see still all these wicks supporting it. And even when we on that illiquid market, when we had those slow days, we came back down trying to clip stops, take out stops. We come through, we take out those stops, and we get absolutely no traction to the downside, right? What do we get? We've only got wicks to the south, and bam, right back into the scene of the crime. So even though this highs has to be respected, you have to respect it. You see all the sellers still protecting this. To me, it's still chop inside this range, chop around 82.20s. Not very interesting, but I still suspect that if it fails, it needs to fail from a higher level, but I suspect it's going to hold relatively bid, right? So we'll see how it plays out. Does that make sense? Does that answer your question? Okay. Rock and roll. Yeah, guys, I'm trying to go through the more important pairs. I know some of you have asked about the more funky ones. Nothing against them. I'll look at them if we get time, but I want to favor the more interesting, the more liquid. Let's put it that way. Okay. Okay. Mac, I don't have the ZBs here, so on this platform, so I'm sorry, I can't review them. I'm sorry. I'll look at anything I can look at on this platform, really. Again, a lot of the yens and the CHF pairs, they're just simply not that interesting, right? Not only because of the central bank wheeling and dealing, just because they're stuck in some kind of chop, right? So keep in mind, a lot of people, especially people who haven't been trading for a long time, or on and off, they feel like, if they trade, you have to trade USD JPY, you have to trade USD CHF because they're big majors, but really they haven't been that interesting, right? If anything, you want to play with the central banks, but on their side, not against them, but just not that much edge. You've got a lot more edge, a lot more moves in other pairs, so I would really suggest you try and focus on those. Okay. Sorry, I'm just tweeting quickly to somebody who's very nice, always does a bunch of. Okay, so what's going on here? So yeah, sure. Let's do it. Let's be very democratic. Let's look at Euro JPY. Okay, let's look at Euro JPY. What's going on Euro JPY? So another one you may have seen me going on about like a broken record on Twitter is it's all about the 139.00. Yeah, right? And what's going on here? So clearly it's not, there's nothing special about the number. It's not like we're fixated around the number. The only thing is we're looking at the chart, right? And you see what's happened, right? Once we had this, if you look at it here on a daily, you see that we it's been a nice slow rotation higher, very nice slow rotation higher. Has some aggressive moves, but pretty much slow rotation higher after the big moves in the past years, right? And you see what has happened here. Bam, when we popped into these new highs, right? Which incidentally 139.00. Look how long we stayed here, right? A lot of people were getting very excited because it was failing to get traction here. We had a couple of negative closes at highs, right? But look at how it every time 1, 2, 3, 4, 5, 6 days, 5, 6 days. Every time we traded below the 139.00, we ended up closing the day back above, and from there we built a base for the next leg higher, and when we failed, we broke through it. Now, normally, right, you'd expect this, if the move's strong, you'd expect this resistance support zone to act as resistance support. But you see what happened? We came in, we tried to get some bids, and then knife through butter. Now, when you see this action, if this is a strong break, usually, right, you would expect once we move back into the level we broke down from, the market to sell it and to continue the extension lower. What's happened here? Well, in those also illiquid markets, we got to press back above, and now we're holding exactly the same scenario, right? So the only thing I'm saying here is that this is a very big level. It's really important, and don't make the mistake of ignoring it, right? So The only thing, unless we can get daily closes below this, this will probably hold relatively bid. Now, the issue is, even if you get a daily close below, you've still got very strong support you have to deal with, right? So just in terms of the way this is trading, I'd say, you have more risk of velocity to the upside than the downside, really. But that's pretty much the chop range we've got, the bigger range we have. But it's really all about these 139.00. So expect hold below to give you pressure to the downside. But if we get traction to the upside, we could potentially go all the way back in those highs. So just saying, a bit cautious here, because there's more risk to the upside than the downside here, at least in this chart. Does that make sense? So again, interesting chart, interesting levels. But again, not surprising to see price just stopped at these levels, right? It's really not, shouldn't be surprising, right? Yeah, Euro GPB. What's going on Euro GPB? So this is a daily. So what we said is, when we were breaking lower, we had a lot of pressure on, and what we were saying is, if this is going to catch a bid, at least on that very aggressive day down, we'd expect it to catch a bid inside this whole zone, right? Two previous supports, we'd expect this to support it, right, on this price lower. And that's where it started to base, at least initially. But also we suspected, trapped longs to get out on any bounce. And it's all about that zone. I really don't think this is such an interesting trade tactically intraday. I think there's a lot more edge on Euro and cable. But I think here the focus is on the bigger moves, right? So if you're looking at it even on this monthly reminder, we've got this move from highs to lows. We came back down, 50 back got sold, printed new lows. We came back here, continuing the series of lower highs. So right here, we're looking for a move back into 67 50s, right? A lot of people then extended the fib to the new low. And what happened here, new high to low, even though it bounced, 50 back got sold, double top here, and pressure still on, and people looking at those 72s. So clearly pressure is still on, and the question is, are we going to catch a bid? A lot of people are looking at the move from this move as the opposing fib move. It's not something I would be focused on because of the failure at highs, so the double top. So that's really not a fib I would personally have on my chart. Right here, it's all about these lows here. The way I'm looking at it, that if we can hold, then you could see some kind of a bounce, maybe all the way back up into these 83.50s. But the way this is trading, similar to cable, I would expect sideways chop to continue in the most recent continuation of the most recent trend. So I'd expect the sellers to keep pressure on here, to keep on trying to take it back down into the 70s. And I wouldn't put too much emphasis on candle patterns on daily closes today, right? Simply because we've got a lot of event risk, a lot of stuff coming on this week. So always be a bit cautious when you're looking at action on dead days, and people who were trading over the holidays know about that. Okay, I have experience with that. Any other chart anybody wants to look at? Yeah. No, sorry, here it is. CAD, we looked at CAD before. You might have missed it. So you'll be able to look at the recording. Yeah, okay. No, I don't have a graph for Bitcoin here. I wouldn't look at it if I had it, to be honest. But so what's going on here? Well, I think the best way to look at this is really to get back on the weekly. And this is a chart we looked at for a long time. This is a big breakout we were on for quite some time. And basically what we talked about was this whole range, right? And what we were saying is basically, you see, we were stuck in this range for about 3 years, almost 4 years, right? And the point is, once you get breakouts out of these ranges, usually you get very sustained moves. You have to pay attention. You know, if something stays in a range for 3 years, it's going to take something substantial to get a strong break outside of the range, and you want to pay attention, right? So what happened here on this range, what we said is we're looking at the breakout to give us a potential play for a much bigger move, potentially all the way back into the 50 back of that move from highs to lows, which has a target at the 2070s. Okay, that's a pretty huge move. The first target was the sell-off of the most recent peak, and that's coming in at 191.90s. But basically, that's the bigger picture, right? So right here, the way I look at it is still, you have to respect that breakout, right? You have to respect that breakout, and as long as it holds that breakout, it's going to try to move up in extensions, right? Now, clearly there are some issues in terms of that you need to see some kind of a healthy retracement because it's bid up so aggressively. But right here, it's clearly in moving up, and I'd expect the dips to get bought to continue to try and rotate higher, okay? And in terms of short zones from bigger swing, I'd be waiting to engage at one of the two swing targets we have rather than trying to, you know, to be aggressive at an earlier level. That's the way I would be looking at it, okay? Amit, you just asked for 3 pairs in a row. Pick one. Okay. GPBNZD. See if I can find it. Who's going to help 50 who's gone blind? Forex. There it is. Do you have a specific question on the pair? No, I don't trade any EM pairs. I'm really not interested at all. But you know, very few people are really interested, so we're going to try and stick to the, you know, especially as an intraday retail trader, got very little edge, very little edge. So what's going on here is basically, if you look at it from a weekly, we talked about the 2, right? Remember, there's a chart on the blog. We've talked about this before that talks about the action, and we said that basically number 2 is the level to watch. That's the pivotal action level for Momo, right? And you see what's happening. It's just hovering around here. Now, the big question is on this pair is, are we going to break higher? Are we putting in a bottom to really try and rotate back into at least something like this whole breakdown point here, which would come in around the 240 level, something like that? That's the big question here. So what I'm looking at is this 2 level, and as far as we're concerned, we're looking at this as the potential to break back up to the upside. And you see what's happening. It's struggling here, but you see what's happening. If you look at this monthly, every time we press below, we fail to close below, and we're back above the 2s. So unless we start getting a close below the 2 on the monthly, then we could see more of a retracement, some take profit. But as long as we keep on getting closes above, we'd expect this to try and rotate higher. So again, the 2 is the level to watch, the level I would be the most focused on, okay? And Let's do another one. GPBAUD. What's going? Do you have a specific question on here? It's you know it's the same thing. It's just they're just all swings on cable breaking higher, right? On UK on the pound catching a bid. So you see what's happening here. We've made a run all the way back into this previous resistance zone, and what is the market doing? The market's using that previous resistance zone as support now. So as long as we don't get a quick move back below that level, you know, chances are that all these pairs, you know, are going to continue to try and move up in extension. As we said, right, it's always this, you know, essentially it's pretty much the same chart across the board, right? So there's a lot of different ways you can look at it in terms of trading, but in terms of moves, that's what's happening, you know, and it's the same across the board, right? So very technical, but here they're moving in extensions, right? You know, in terms of fibs, you want to use, you know, you can use fibs in a varying amount of ways, right? But it's very tricky to sometimes, if you're just used to looking at 50 backs when the markets are moving in extensions, because you don't understand why isn't it coming back. It's because the moves are very aggressive and they're extensions. So you'd probably have to look at 23 retracement, something like that. It's just a different kind of action. It's a different kind of market. And again, I wouldn't focus on why something is going up or why something is going down. Is focus on how it's behaving at specific levels, right? And that's what's going to guide you. That's the most interesting thing. Okay. And again, if you look at euro, it's similar in the way it's behaved. Very technically. We've talked about all those moves that have played out very nicely, right? We have this initial press from lows to highs. This 50 back, broader 50 back, holding a higher low and just keep on holding. And it's rotating, broken highs. It's taking its time. It's struggling here. But this initial move that we've been looking at, you know, since it originally triggered, the target for this is 141.04. So that's why, again, for some of the newer followers, you hear me talking about 141. That's what I'm talking about, right, in terms of the major swing. Okay. So then we had a lot of other fibs inside the fibs, technical moves. You can look back on the blog. You know, a nice little move right back here into the 50 back. It triggers off, and now with the same kind of target around the 141s, right? All the moving averages holding, the 100, the 200 holding. So right here, the focus is going to be on how we trade around these offers that have managed to cap it and are still capping euro, right? Keep in mind that it had every possible excuse to really press aggressively lower, and it didn't, right? It got bought well ahead of those 33s, kept on catching a bid, and it's right back at highs. So you have to respect that. It looks like the ES, it looks like a lot of other stuff that if it fails, it has to probably fail from a higher level. But clearly this is a zone to be respected. But unless something drastically changes, it still looks like it wants to try and make its way higher, right? Going into the week, what I would be focused on if we go on to the daily, right, is the fact that right now the big base support lies on that whole protection of the 134.40, right, level, which is being an important level. We've had it on a chart for a long time, right? What was the support? 34.00 into 34.50. The resistance, 36.00 into 36.50, right? So right now, we've broken outside of that area, right? And it's so as long as we hold, this is going to still continue to remain a big choppy zone. Don't be confused about velocity of move inside range here. But the way this is trading, it looks like it still needs to travel a bit to the upside. It's still got some unresolved business to the upside. We've been talking about the year open, right, which is pretty much, and those 3770s short term, we'd expect those to try and print this week. Very tempting for the market to go in and take those out. A lot of people talking about the January effect, looking for those to hold, but I still feel that there's some unresolved business up there. So that's what I would be focused on in terms of moves. You know, let's see what happens if we move up there, and this whole 3650, 3600 as the closest support zone here going into the week. Okay, does that make sense? Okay, rock and roll, guys. Listen, I'm going to call it a day here because we've done 45 minutes. I don't want it to be too long because if not, it's going to take ages to upload to YouTube, and I know everybody prefers the YouTube. So I'd like to thank all you guys for sitting in. I hope you enjoyed it as usual. If you like the content, don't be shy about retweeting it or sharing it or whatever. Have a great day. Keep the context in mind. I'll post it as soon as I can. I'll probably post the Adobe and the YouTube one, so you could try both of them. Let's see what happens again. Thanks a lot for hanging in there. Take care, guys. Have an awesome one.